program at Penn. We are very excited to have you all here. First and foremost, I hope that everybody's semester is going well and that your family is doing great. To begin, I am Hatef Alavi, Associate Director of Penn First Plus. I oversee all the programming events for Penn First Plus, and I also work with our colleagues over at SRFS to address any students' concerns that has to do with their financial issues. I also want to thank our colleagues over at SRFS, in addition to PenCap, for this collaboration. We hope that you gain as much information as you can regarding ways in which you can manage your financial duties. Next, I want to introduce Keisha Johnson.
Thank you, Hatef. Hello, everyone. Welcome to our workshop. I'm Keisha Johnson, and I'm the director of the pre-freshman program. And I wish you the best as you're in week 4, I believe, of the semester. And I'd like to pass it over to Jen from PenCap.
Hi, everyone. Thank you for having me today. I see a lot of familiar names, so welcome, students. It's so nice to see your names. I am Jennifer Toadvine, the head academic counselor here at PenCap.
I'm actually going to ask you, Nick, to also introduce yourself before we go to John.
Hello, everybody, and welcome. My name is Nicholas Matthews, and I'm the graduate assistant for the Penn First Plus program, and I'm getting my master's in counseling and mental health services. Just here, happy to be a resource any way that I can.
I'll go next. Hi, everyone. My name is John Haggerty. I'm the Associate Director for the Undergraduate Financial Aid Program here at University of Pennsylvania in Student Financial Services. And I work very well and closely with all of these people to address concerns that students have on a daily, if not most weekly basis. So it's good to see you all here.
Great. Hi, everyone. My name is Lindsay Bertram, and I'm the Financial Wellness Program Manager. So thanks to Hatef for organizing this workshop. We're really excited to talk with you all today about student account refunds and some strategies for managing them. And throughout the presentation, I encourage you to send questions in the chat. There will be a few places where we pause to take questions, but we can also take them at the end. So we do have this introduction slide, but we've already gone through it. But again, John and I will be presenting today. John more on the financial aid side, and I'm going to talk more about how to budget. And just to preface this, I also want to share, I am a Figley Penn alum. And so I was a highly aided student, and I did a lot of this when I was in your shoes. So I'm always happy to talk about this from my professional role, but also happy to talk about my experience as an alumni if you have any questions as well. So first, I'm going to start by talking a little bit about the Financial Wellness at Penn program in case you haven't engaged with us before. So our program launched in January, and you can read our mission statement on the screen. But broadly speaking, our goal is to help students understand how to manage their personal finances, not only now, but also in the future. And given that our mission is education-based, I do want to provide a disclaimer up front that financial education doesn't solve all money struggles. Financial education can't fix poverty or repair damage caused by years of economic injustice. Again, as someone who was a Figley student, I budgeted weekly. And that didn't make me less poor at the time. So I just want to acknowledge that we're going to provide you with some great insights for how to manage your money today. But we recognize that it's not going to solve every issue, and that's okay. We want you to know how to manage what resources you do have available to you. So we like to start every presentation by outlining the goals we hope to achieve throughout the course of our time together. So first, John's going to talk to you all about the financial aid process and what circumstances lead to you receiving a refund. And some of you may know this already, but it's going to serve as a refresher to help you sort of contextualize the rest of what we're going to talk about today. And then we're going to talk about some potential strategies for how to actually budget your refund and how to manage it throughout the course of the semester. And we'll also identify some options for implementing that budget. So I'm going to hand it over to John to talk about student account refunds to start.
Again, and thank you, Lindsay. But again, try to just go back and clear your head about how you might understand about how refunds work, even if you do, and just kind of let's go through this process together to get an understanding of how this actually works for you on a more specific level. So why do students receive student account refunds? It's based around a lot of factors, but here's where we're going to start. We're going to start with the cost of attendance and the different types of cost of attendance that we have for students specifically. I do want to highlight that this cost of attendance, or your cost of attendance, could look different than this, depending on the year that you're in. These are the billed expenses and anticipated expenses that you're going to incur for this academic year. So next year might look different. The year before that might have looked different from this. Your total budget is what's used to create your financial aid package. So depending upon whether you're living on campus, living off campus, or living with your family, your cost of attendance is going to look different, and your costs are going to be different around that, as you can plainly see here from the breakdown. The expenses that are marked with asterisks are billed expenses to you, which means that Penn will bill these charges to you. The ones that do not have asterisks next to them are things that we understand you're going to incur as expenses as students here. The one thing I'll point out is books and supplies, for instance. You can see that expense remains equal across the board. And because whether you're living at home on campus or in an off-campus situation, we assume that your book costs are going to be relatively the same for the academic year. And so those are things that necessarily billed to you, although you do go to the bookstore and you are billed there for that book. We do not bill you as a university for those books. And those expenses do vary throughout each semester. So it's kind of hard for us to bill you for that very specifically. So again, we have the tuition fees, housing and dining, which are generally those billed expenses that the university charges you. And then you have your unbilled expenses, the book supplies, transportation, and personal expenses, which could be something like toiletries, for instance. Those are things that we expect that you're going to incur as costs to you to be a successful student and person, but you're not being charged for those specifically. So hopefully this helps you understand sort of what the cost of attendance really is, and the difference is basically how you reside on or off campus or not. So that's the breakout for you there. Next, we're going to talk about how we package your financial aid award around that cost of attendance. So what we do in student financial services, more specifically with our needs analysis committees, is we take a look at the application you've submitted. You're going to submit to us the CSS profile, the FAFSA, your parents' tax information, and the Penn Financial Aid Supplement every year for financial aid consideration. That is a wealth of information and documentation to show us what your family's ability to pay our cost of attendance each year, right? So we take all that information, we derive an estimated expected family contribution for you and your family for one academic year based on all the information you've supplied us. So we take that estimated family contribution, the EFC, and we subtract that from the cost of attendance that you are currently under, and that is your demonstrated financial need. We meet that 100% with grant funding and combination of that with work study. So that is essentially our packaging process. We're assuming that your family can pay so much of what your cost of attendance is going to be, and we subtract that from the cost of attendance. So that's where we derive our packaging strategy there. And hopefully that makes sense. We'll go into that just a little bit as we go further here. So again, your bill expenses are applied to your account as positive numbers, and your grant funds are applied to your account as negative numbers. Very simply, the remaining amount is what you owe or what you will receive. So again, positive balance means that you owe money to the university, and a negative balance means that you actually have a refund pending and credited to you. Very simply that way. You'll receive a student account refund where your grant funding exceeds your billed expenses. Again, that negative balance means that you essentially overpaid the university and you are due to receive a refund. Whether it's grant funding, whether it's a combination of an outside scholarship with our grant funding, it might be a named scholarship, any amount of funding that pays to your account that overpays it will provide you with a refund, okay? So let's review an example that demonstrates this. Here's a refund example. Essentially, let's look at the cost of attendance on the left there first. You see all of your billed expenses and your unbilled expenses, and that is your total budget at the bottom there. We then derive your financial aid package, which includes work study, in this case a Pell Grant, in this case also a named scholarship, and then of course a Penn Grant. We then place the EFC in there to meet that total budget. Again, the EFC is your estimated family contribution. This is not some sort of grant funding. This is what we expect your family to contribute towards your expenses for this year. Now we can see that the tuition fees that you're being charged, the Pell Grant, your name scholarship, and the Penn Grant exceed those charges to you. And in this case, likely because the housing is off campus, you're going to receive a negative balance of over $10,000, as you can see at the bottom there. This $10,000, and this again is for the academic year, when we bill, or I'm sorry, when we produce a financial aid award in your cost of attendance, it's for the academic year. So likely this negative balance will be in half, one half for the fall term, one half for the spring term. And in total, you'll receive over $10,000 back in this example. This is money that comes to you directly, and you can sign up for direct deposit to go to whichever account that you determine, or it will go to you by check to whichever home address you've listed on your account. And so then here is $10,000 in your pocket. And so really, what then do you do with it? Because even for someone who's considered to be an adult like myself, that's a lot of money. So we want to make sure that you're going to be using that money correctly, making sure that it's going towards those expenses you see on the left there that are not billed by the university. And how do we do that? So I'm going to hand it off over to Lindsay at this point to help you understand.
Great, thank you, John. So now that you know where the money comes from, it's time to make a plan to actually manage it, like John mentioned. And the reason we're talking about budgeting a refund is because these funds are intended to help you cover the academic costs that are listed in the cost of attendance throughout the entire semester. We want to make sure you have these funds throughout the entire semester so you can cover your needs as they arise. So first, we're going to talk about general budgeting before we talk about refunds specifically. And this is important because your refund probably isn't your only source of income. Like John mentioned, you should also have your expected family contribution to go towards some of your costs, as well as a work study award if you're working this semester. These will help you cover some of those unbilled costs that John discussed. Additionally, I want to highlight that regardless of the income source or sources, budgeting has the same steps all the time. So incorporating your refund into your broader budget will help you make a plan to cover all of your educational expenses and any non-educational expenses you have. So I also want to take some time to just clear the air about budgeting. I think folks can be afraid of that word and feel anxious about it. A budget is simply a plan for your income and expenses. It doesn't have to be restrictive. It doesn't have to be time consuming. A budget should be whatever you need it to be in order to best keep track of your cash flow. So we always approach budgeting with these 6 simple steps that are listed on the slides, and I'll walk you through each one of them. So when you start budgeting, we always want you to start by tracking your income and expenses for about a month. And we say about a month because that tends to give you an idea of what sort of habits you have with your spending and earning. Now, and we'll talk more about implementation later, but if you go the route of using a mobile app, you may be able to skip this step. When you connect your bank account to the mobile app that you're using, it will often auto import some recent spending and earning data, and that may give you some of these trends without you having to really put any effort into it. If you want to go the manual route and use a sheet of paper or a spreadsheet, you'll want to take note of all incoming and outgoing funds for about a month and keep track of these amounts, whether they're from a debit card, a credit card, a cash transaction, or even like money transfer apps like Venmo or Cash App. This will allow you to identify trends later and decide if you need to change any habits across all of your spending methods. So step 2 is to identify those trends I just mentioned. So in what categories do you tend to spend your money? And the cost of attendance is a good example of how to sort of start to categorize your spending, but you may have additional needs that aren't reflected there. So make sure you incorporate that as well. And so as you're looking at your budget categories, are there areas where you spend more than others? For instance, right now, you might be spending less on going out. than you typically would, and you might be spending more on virtual entertainment, like some streaming subscriptions or some virtual fitness resources. We want you to organize your financial habits in the way that makes most sense to you. There is no one right way to do this, so take time to figure out what categories make sense to you specifically. Once you've done that, identify your regular income streams. So what are they? How much do you expect to get paid? When will you be paid? And when you're thinking about your income streams, be sure to include your refund in the list of income. That way you can plan accordingly. And this can help you schedule out when you plan to make purchases that come up throughout the duration of the semester or the year. Next, we want you to identify your regular expenses. So some of these may be what we call fixed expenses, which are things that happen in a regular time period of the same amount normally. These may be things like a phone bill or a monthly subscription fee. Other expenses may be variable, so groceries or clothing costs, and those things may depend on usage within that month or how much you may need it at that time. You may not have these things all the time. Either way, identify the major costs that you anticipate incurring in a month. Additionally, take note of any one-time costs you expect to incur during the semester. There are a few ways you can account for these one-time costs, and we actually have a workshop scheduled for later in the semester to talk about how to plan for irregular spending. But you can get them out of the way at the beginning of the semester when you receive your refund. This might be good for things like textbooks, which you need for the entire duration of the semester, so you might want to get them out of the way up front. Alternatively, you can set the money aside in a savings account so it's ready for you when the time comes to actually make the necessary purchase. So in a typical semester, I would say this is probably a good strategy for buying travel home for winter break. So those are a few ways you can approach sort of irregular expenses. So once you've identified your income and expenses, you have a better sense of your monthly cash flow. Being aware of this can help you make more informed decisions about purchases you make and how you might schedule out when those will happen. So step 5 is optional, and it's setting boundaries. So remember how we said that budgeting doesn't have to be restrictive? If you want to make drastic financial changes of some sort, you could budget with a more restrictive approach. It's completely up to you. And I'll say from personal experience, when I've noticed a change in financial habit that I feel is detrimental to my budget, something I'm really guilty of is like picking up food on my way home from work because I don't want to cook dinner when I get home. I have recognized that in the past and implemented boundaries to sort of help myself get back to the habits that I value. You know, these restrictions aren't needed all the time, but they can be helpful during challenging circumstances. So consider it occasionally, but you don't have to do it all the time. And then the last step is to reflect regularly and adjust as needed. So budgeting isn't a one-time occurrence. It's a strategy that you practice regularly to stay aware of your financial standing at any given time. My recommendation is that you set a weekly or bi-weekly reminder on your calendar where you'll take 15 to 30 minutes just to review your transactions for the week. So if you use a mobile app, you might go through and make sure it auto categorized your expenses properly. If you're doing it manually, you might type all your expenses into a spreadsheet, whatever it may be. As you review this regularly and your priorities and habits change over time, you'll be able to make adjustments to your budget and adapt to your new needs. So now that we've talked about budgeting in general, how are refunds different from other income? So first, we want to acknowledge, like John did earlier, that refunds come in the form of a large lump sum that you're expected to manage over the course of a few months. And this can be really overwhelming, especially if you've never managed that much money before. To give a personal example, when I was a sophomore at Penn, I chose not to have a meal plan. And because of that, I ended up receiving a refund of about $3,000 each semester. It was a little less than that, but I'll use that to have an even number. I was completely shocked when I first saw that number and when it hit my account, because I had only ever managed like a few $100s at a time, like never even had $1,000 in my bank account. And it was overwhelming. And so I had to figure out how I was going to manage that. And, you know, with practice and over time, I found a strategy that worked for me. But I think it's really important to acknowledge that the first time you experience this can be kind of overwhelming and a little stressful, and that's okay. And that's the entire reason why we're doing this presentation today, and why you can use Financial Wellness at Penn as a resource for how to manage that when it comes up. So luckily, Financial Wellness at Penn has worked with the Financial Aid Office to provide an email notification to students who receive refunds at the start of every semester. And, you know, we do sort of a brief explanation of where the refund comes from, and give some tips for how to manage it. So if you didn't receive that this semester and you received a refund, you should receive it moving forward. So another reason why refunds are different than other funding you might receive is because, like John discussed earlier, they're technically already earmarked for specific costs in the cost of attendance. So these refunds, in addition to your work study earnings and your expected family contribution, are intended to cover your unbilled expenses. So again, these are things like books and supplies, housing and dining if you don't live on campus or if you don't have a meal plan, personal expenses, local transportation, and sometimes travel, depending on your cost of attendance. And you've been given exactly enough money to cover what's listed in the cost of attendance. So in an ideal world, budgeting this money should be very straightforward. However, we also want to acknowledge that we know students spend these funds on non-academic costs. And I won't pretend that I was a perfect student when I received a refund and used the money for what I was supposed to. But it's important to acknowledge that we don't recommend this strategy for a few reasons. So, you know, once the money is direct deposited into your account, we don't see where it goes, and we have no way to tell you what to do and what not to do with it other than that email you'll receive at the start of the semester when you get the refund. If you spend the refund on non-academic costs, we won't know. So if you need to pay for some expenses throughout the duration of the semester, but you spent your refund on other items, you might struggle to find the money to cover the items that you need. And this is why money management is important. We want you to have the resources that you need at all times in the semester. Once the money is in your hands, it's up to you to manage it. And so that's why Financial Wellness at Penn exists. You know, we are here to help you identify strategies to make it last through the entire semester. So if you need to use portions of the funding to cover non-academic expenses, you know, we can take a look at your budget. We can talk to you about it. Just let us know. So now let's talk about some strategies to make that refund last throughout the semester. So option one is to keep your refund in your checking account and spend like you typically would. I'd say this is a pretty good option if you trust yourself not to make impulse decisions just because the balance in your checking account is higher. I will personally say this strategy would not work for me. But if it works for you, I'm proud of you and more power to you for having that restraint. Option two is to keep your refund in a savings account and withdraw money as you need it. So this might be an even better option than option one because savings accounts are more likely to offer interest on the balance in your account than your checking account might. I might even recommend a high yield savings account for this reason, even though interest rates generally are pretty low right now due to the impacts on the economy from the pandemic. High yield savings accounts are still going to offer you a higher interest rate for what you're holding on to than a typical savings account would. Something else to keep in mind with this option is that many savings accounts also have monthly withdrawal limits. In my experience, that number tends to be 6 for some reason. So keep those in mind so that you don't incur any unnecessary fees if you're pulling from this all the time. Again, this depends on the specifics of your savings account, but this is one way to sort of keep track of your money. So then option 3 is to keep your refund in a savings account and withdraw a monthly paycheck for yourself. So in this scenario, you would divide your total refund for the semester over the months that you need to keep it through the semester, which is typically 4. And this is a sort of set it and forget it mindset. You can pretend you don't have the entire refund at your disposal and pay yourself each month to cover your needs, so you only have that amount to spend in the month. And at the same time, the rest of your refund is also still sitting in your savings account should you ever experience some unexpected cost that you need to cover and you need to pull extra. Just remember, if you do that, that does mean you have less money for a later month, but the option is there if you need it. So we're gonna go back to that example that John covered earlier, just to sort of explain how option 3 might look. So as a refresher, the amounts in the blue boxes under cost of attendance and financial aid package are the amounts that are applied to the student account. So the billed expenses are applied as positive amounts and the grant funds are applied as negative amounts. This leads to a negative balance, an annual negative balance of $10,848. But because that's the annual amount, this student would actually receive half of that each semester. So in the fall, they'll get $5,424. In the spring, they'll get the other half of the refund. If this student chose option 3 from our recommended budgeting strategies, they would transfer all the money into their savings account as soon as they receive it, or maybe direct deposit it there directly. And each month they would transfer $1,356 into their checking account so that they can cover their monthly expenses through their checking account. This student would also still have their expected family contribution and any work study earnings that they have to help cover any remaining expenses. So by now, you're a budgeting expert, right? So how can you actually implement the budgeting strategies we've discussed? And you have a few options. So the easiest is probably to use an app. Using an app tends to automate your budgeting process. So you could use free apps like Mint or Clarity Money. Mint looks at budgets from a monthly perspective, and Clarity Money looks at budgets from a weekly perspective. So whichever option is more helpful for you in the way that you conceptualize your spending, go that route. There are also other apps out there. These are just 2 free versions that we've heard from students that they like. I personally use Mint. I think John also does, if I'm remembering correctly, but I think these are 2 pretty common apps. At the same time, your bank's mobile app might offer a budgeting tool as well. I'll say I use Bank of America and they do have a budgeting app. If you want to go the manual route, you have a few options as well. So we've done some of the heavy lifting for you already, and we have a budget template that helps you identify your income streams, including your aid-based income. It's available through our website under a tab called Financial Wellness Toolkit, and we can share that link with all of you after this as well. Alternatively, you could build your own if you're really Excel savvy. This is how I budgeted when I was a student because I wanted to be slightly more vigilant about my spending at that time. If you want to pursue this route, go for it. And feel free to shoot Financial Wellness at Penn an email if you want us to take a look at it. We'd be happy to walk through your budget with you. So that is actually the end of our workshop. So I hope we were able to clarify the process of receiving a student account refund and how to manage it. If anyone has questions, please send them in the chat. We'd be happy to talk more about this with you. And while we're doing the Q&A, I also want to encourage you to pull out your phone or open another browser to complete the evaluation. So you can scan the QR code or follow the short link listed on the slide. We really value your feedback, and receiving it is crucial for us to improve these presentations for future audiences. So please fill it out.
Lindsay, I guess when students get their refund, can they actually like set up an appointment with you to go over the budgeting techniques, or should they reach out to their financial advisor directly?
I would say, so it definitely depends on the nature of their question. So, if they have questions about more of the mechanics of the refund and sort of where it comes from, they should definitely be talking to their financial aid advisor.
Mm-hmm.
If they just want money management tips and they want someone to review their full budget with them, that's something that our office can do. So they can always email us. Our email address is listed at the bottom of this slide. It's financialwellness@upenn.edu. And we'd be happy to take a look at a student's budget.
Thank you.
Lindsay, would you be able to just, I'm thinking about when I was in college and how the Afterpay program that you see on a lot of websites now would be very alluring to me, but maybe some of the dangers of some of the new financing tools that are easily accessible to students.
Yeah. So I think, are you referencing when you can go on and like spread out some expense over the course of a few months? Yeah, I mean, I think that's basically the same as using a credit card, right? You are incurring some expense upfront and you may be paying interest over time as well. So I think folks have different perspectives on the value of that. I would say you really need to know whether you're okay with paying extra for the opportunity to pay it off over time. If that's something you're comfortable with, it may be a good option. Only you get to decide whether that's good for you or not. But keep in mind the total cost that you'll incur by the end of it. So is it worth the extra however many dollars that you may pay by the end for whatever you're receiving from it?
Thank you. I'm just happy those tools were not available when I was 18, or I would have been doing a lot of shopping.
Yeah, it's definitely really tempting. I don't know how many students in this call are first-year students, but we're running a series this semester for first-year students, and our next workshop is about navigating social spending pressures. And we don't just mean peer influences, we also mean like the ads you see when you're scrolling social media. It can be really tempting to buy these things because other people have them, and there are all these options to make it available to you, like those Afterpay programs that Jen mentioned. If you're interested in hearing more about that, you can attend our other workshop on that topic. It looks like we have a question in the chat. So someone asked, if I wanted a one-on-one Zoom call to go over my package in specifics, should I contact my financial aid advisor? John, I'll hand that to you.
Yes, Sarah, thank you for the question. I would say that yes, you should contact your financial aid advisor to go over your package in specifics. And we can certainly accommodate a Zoom call if you prefer that, because that would allow us to sort of do a share screen for anything that you would love to show us, or vice versa. And I think that would be a great opportunity for you. So please go ahead and do that.
Great. Any other questions before we wrap up? Okay. Well, again, thanks for joining us today, and please fill out the evaluation. If you do have remaining questions after this and you don't want to ask it in a group setting, if it's more about financial aid and the refund itself, I'd recommend you contact Student Financial Services. And if you want to talk more about some of your money management options, you can always contact us directly or take a look at our website. Please stay connected with us by following us on social media or signing up for our newsletter. We really want to see you at some future events. So thanks for joining us. And yes, the recording will be available after this. We'll follow up with everyone who attended to share it. Good question.
Thank you.
Thank you so much, Lindsay and John, for your amazing presentation. I know I learned a lot, so I'm sure our students also did as well. Like Lindsay said, be sure to reach out to either P1P, PenCap, or SRFS with any questions. and we will do our best to get you connected to the right resources and ensure that you are well, situated with all the resources that you need in order to be successful in your journey at Penn. Thank you, everybody.
Thank you. Have a good
Bye,
day.
everyone.